Hey guys, what's good? I'm Andre and today I want to follow up my last video from yesterday with a bit of a rule set for swing trading, just some guidelines that we can always take care of, make sure we always have them at the top of our minds. And again guys, we're planning through 2022 to make sure that we have a successful portfolio and that we can beat the markets. I do want to remind you that I'm gonna start a new portfolio series here. It's gonna be a Road to Glory type series where I'm planning on building out a portfolio that's gonna be starting from anywhere between 3k and 5k. It depends on how the last few days of December go, and then let's see how far we can get it, guys. Hopefully we can at least beat the markets next year. I know that it's the sort of the size that you probably have as well, and I just wanted to make sure I build this portfolio out so that we can work at it together. You can have some ideas from me, maybe we can exchange some thoughts and just see how far we can take it. So before we jump in, guys, like always, I'm gonna plant one tree for every 20 likes this video gets. Help me out and we're gonna help the planet out as well. So let's jump into it. I want to build sort of a rule set that you guys can have. We're gonna start out at 10 grand. Let's say we have $10,000 to work with. This can come in the form of pure cash to use in your portfolio, or obviously like if you have 7-8k, nobody died over using a small amount of margin whenever necessary. But let's cross that bridge when we get there. The plan here is gonna be for us to take roughly 240 trades a year. That amounts to 20 a month. And guys, honestly, even that is a lot. It's a lot. We might not even be able to take those 20 trades, but even if we like dial it down to 10 trades, it's gonna be exactly the same because we're gonna try to go off of numbers, off of statistics. So as long as we respect these rules that we're gonna build for ourselves, we're gonna be in a great spot. So guys, the target here is gonna be to achieve a win rate of at least 40%. So 4 out of each 10 trades that we take should be a winner. Now obviously you're no guru, you're no one-hit wonder. If you achieve a 40% win rate, you should do better than that, and let's hopefully try to aim towards 50, 55, 60% win rates. Don't expect yourself to be at 80%. You won't be able to make sure that each trade wins because guys, it's simple. We cannot predict tomorrow's news. When you're gonna be able to predict tomorrow's news, that's when you can have 100% of your trades be successful. Otherwise, we can do our best to do technical analysis to see how the company is doing, to make sure that the company is a great one and the fundamentals are there. But at the end of the day, Omicron comes out and the stocks tank. The Fed has a new policy and the stocks tank. You get the idea. We cannot predict the future, but we can do our best to get statistics in our favor and beat the markets if we apply the same rules consistently over a large period of time. So guys, again, win rate roughly 40%. The risk per trade, guys, is gonna be 1%. What this translates to is that we are the 1R that we were talking about last time. The 1R needs to be $100, 1% of your portfolio. So let's say you're willing to take it to 2 hours and lose $200 of each trade. While that's a bit more risky and I don't necessarily recommend it, especially starting out, you can be successful by doing that as well. Just know that it's gonna take a bit more time probably, and you're gonna have to be a bit more scrupulous with the stocks that you're using. The one thing I want to mention here is that you need to make sure and absolutely vow by the fact that you're gonna make the 1R or 2Rs, basically the risk per trade is gonna be the same one every single time. Basically a percentage of your capital at that point in time. So again, if we're going off of $10,000, our 1R, 1% is gonna be $100 per trade of capital that we're willing to lose. Now, willing to lose doesn't mean that we're gonna invest $100. It means that the max loss that we're willing to take on that one trade is gonna be $100, and we're gonna look at some examples here in a minute or two. The potential profit, guys, so the take profit with that same trade needs to be at least at 3 times that. You can go with double, but I really recommend that you source out stocks that are great fundamentally and that offer the opportunity to go 3 times higher. It might take a little while longer, but I really think that it's gonna be better off for you guys, especially since some of you are starting out just now and you're gonna need the winners to sort of dig out the losers from the ground a bit more for you guys. So go with 3%. So that means that we're gonna aim at winning $300 per trade. Again, 3% of the 10 grand, right? So 3R. Now with the guys, if the R reference makes no sense to you guys, please look at yesterday's video. I'm gonna link it down below. It's gonna clear things out quite a bit, but again, we're gonna go into a couple of examples in a minute here. Cool. So with that in mind, guys, we're gonna basically lay out the numbers and see how they plan out. So we're gonna have 96 winning trades. Again, from the 240 per year, we're gonna have a win rate of 40%, just 40%. So it's gonna count out at 96 winners and 144 losers. Boohoo, we lost a lot, right? Let's see if we can still make a profit. We lost basically 144 trades times 1R, 1%. So we lost 144%. Granted, that's a fuck ton, you shouldn't lose that much, and that's why I even recommend that you start lower. Start at 5 trades a month, start at 10 trades a month. 20 trades a month is a lot, and you might not even be able to squeeze them in a 10 grand budget, guys, honestly. So with that in mind, again, going back to the example here, we're gonna have 144% loss, and we're gonna have a 288% win. That's 96 winning trades times 8% risk. So we're gonna win 288%, which means that we're gonna annualize 144% ROI on our portfolio by winning a lot less than we're losing, guys. So this is why I keep telling you, stop overcomplicating things. Make sure that you go into a pattern that you can just repeat on and on and on, and be extremely disciplined about the trades that you can take. If you don't enjoy options trading, that's a bundle of joy in itself. But if you're somebody that wants to keep it simple, just go off of stocks, swing trade, build yourself a plan like this one. Now let's make a completely different scenario here, guys. Start a lot small. If we just assume that we will take 5 trades a month, not more, so 60 trades a year total, guys, we're gonna basically be at the following statistics. We're gonna have 24 wins, again going off of the win rate of just 40%, that's crazy, and 36 losses. Again, a lot more losses than the wins, so we didn't really excel. We are not the best trader out there. Let's see if we can still make a profit. So we're gonna have 72% wins, because again 24 times the 3R that we're gonna take, the 3%, 72% wins, and 36% losses. So that takes us to 36% per annum, guys. And just so we can translate it to our R, the quota that we've been using, we've been going off of $100. So that means $3,600 extra at the end of the year, besides the initial portfolio. That also means the fact that at 36% you roughly 3x the S&P, the Nasdaq ability to grow through the year. So honestly, if you can do that for more than 3-5 years, you're gonna build yourself quite a hefty portfolio before you know it, guys. And again, this is with just 5 trades a month, not more, not less, but just having an absolute robust discipline that you just don't go out of no matter what, guys. And I think, again, this is all it takes to be successful. Now let's look at an actual example here and build out the statistics so you guys can understand what it looks like. Let's move into Webull. Okay, guys, so looking at Disney here, we can see that the RSI is very near to being oversold. They were oversold recently, and then if we go to weekly, they are also extremely near to being oversold. At the same time, if you have a look on the chart here, we can see the fact that they're very near the 200-day moving average, right now sitting at this horizontal support resistance line at roughly $142 ish. They're a bit above today. Today is panning out to be a positive trading day. It might be a couple of days until I publish this video, so heads up on that one. Let's have a look here, right? Let's apply Disney exactly to our trading resume and see exactly where we can get off. So what's the risk gonna be here, guys? We will have a potential risk. As we discussed yesterday, we would have a stop loss after this horizontal support resistance line at roughly 4.5%. This also means $140 in price for Disney. As you can see here, that would mean a roughly $8 per share loss for Disney. Now let's do the math, guys. If we have $100 risk, the way we discussed, based on a 1% of $10,000 portfolio, now we're gonna be able to basically buy 14 shares of Disney. Now obviously, like, that's gonna be our stop loss, guys. We are willing to stop loss at 5% or 4% roughly, and then we're willing to lose $100. $100. So what that actually amounts to is roughly 14 shares that we can buy. Buying 14 shares at $148 means $2,000, 2072 that we're putting out there. Now it doesn't mean that that's the entire risk that we're taking, because again we're gonna have a stop loss that's gonna exit us no matter what at $140. So the max we are willing to lose is $8, and actually, sorry, my math was a bit wrong there. It looks like we have 13 shares actually, not 14. So 8 times 13 equals $104, the 1% that we were willing to lose from the portfolio. Again, buying the 13 shares now with the sort of updated math, sorry for that, amounts to $1924. Again, we're gonna invest roughly $2,000 and we're gonna lose roughly $100. What's gonna be our take profit here, guys? So we're gonna again go by the rule of making at least 3 times as much. If we cannot sway that, we'll simply not enter this trade. So doing 3 times 4% here means obviously being in a position of taking at least 12%. Now, if we go to the previous sort of support resistance line for Disney here at roughly $166, we're gonna be at 14% ROI. That checks the box and then some. But the greatest thing is that obviously Disney is such a phenomenal company, and it's been trading pretty much for the whole year at $180, which means 24% ROI, which means that, guys, if you want to exit earlier and wham bam, thank you ma'am, we had our 3x, we are getting out of here and looking for the next opportunity, fantastic. If not, let's just go to 24% here and we're gonna be able to basically build 6R rather than the 3R that we started out with. That wraps it up, guys. Hopefully the outline that I gave you today, the rule set, is gonna be useful for you guys moving forward, just giving you more trust in your practices, more ability to grow, and more of a process for you guys to follow. Now, if you have any questions, do let me know in the comment section below. I am expecting you guys to subscribe and to watch the whole series that I'm gonna be building throughout next year on that new portfolio, guys. And yeah, as always, I'll catch you guys next time. Take care.